All right, we're going to bring up our next guest, Brandon from Fort Point. How are you?
Hello, sir.
Welcome.
How you doing?
Welcome. How you doing?
I'm great. Great. Happy to. Thannks for having me.
Yeah,
it's a pleasure.
Now I noticed that you're in the full San Francisco attire. Like this is you work for a beer company, or are you a VC firm, or because this is the getup. Like if you come to San Francisco, you have to wear a North Face jacket.
We tried to blur the line a little bit.
Did you buy that
I
in the
guess.
airport? I heard they sell a bunch of them in the airport.
Yeah. That might be true. Yeah, North Face is the official outfit of San Francisco, I think.
Well, it's true. I mean, I was born and raised in San Mateo, so I know how the climate can change pretty quickly.
Yeah.
So it's smart. But speaking of sort of the VC look, you guys have actually raised quite a bit of money to do what you guys are doing, and I think you just closed out another round pretty recently, correct?
Well, yeah, we just closed out a Series A earlier this spring. We're fortunate in that we have a small investor group, very private, very close to our ownership. That has really been there to support growth in a very organic way, but help us do something really unique with our business model, which is not only fund brewery expansion, but fund a functioning regional distribution company.
Yeah,
So
two-pronged approach for you guys.
So yeah, and it's obviously been a capital-intensive business, but we've gotten the resources to legitimately compete on a regional scale, which is there's kind of an inflection point with self-distribution that I think a lot of breweries face, and we made the decision to go all in on that, and as we grew past 20, 25, 30,000 barrels, that we wanted to continue to control our own supply chain, and so yeah, we got the resources we needed to continue doing that and continue doing it independently and on our own in our own way.
What have you learned through that process?
Well, it's certainly not easy.
The distribution is hard. Yeah,
the distribution is hard. I came in a year ago largely because really I think the great filter for a lot of independent self-distributed breweries becomes chains.
Yeah.
That becomes the place where you really tested. We had 2 years of doing business with on-premise, and we'd built up 800 on-premise accounts, and the independent accounts were strong, but the chains were like the last frontier for us, and they don't make it easy. Most of them didn't want us in the door, so
wow.
We had to really change their mind about what advantages there are and prove to them that we could be a legitimate partner.
Now, why didn't they want you in the door?
I think in the past they've given breweries chances, and when it comes down to being very hands-on, they require a lot of service from distributors in general, not so much suppliers, but from the distributor side.
So it was the fact that you guys were self-distributing that they were concerned about?
Yeah, I mean, they want you to make time stops. You got to be there between 6 a.m. and 9 a.m., and then you got to merchandise it. You got to go truck to shelf, and it creates a huge logistical strain. We've been fortunate. We have a logistical director named Alex who's phenomenally talented, and he has put together an amazing team. We've got 12 trucks on the road every day, all refrigerated. We've got a whole logistical team. We got 28,000 square feet of warehousing, and we've built this amazing logistical enterprise within the brewery.
Wow.
That enables us to actually continue scaling, even as we get 100 new stores here, and they're very demanding. And he's created a real scalable system that that's been a big advantage for us for the last year.
So now Fort Point is about 3 years old, you said?
We'll be 5 years old in January.
5 years old. And how much beer are you guys going to make this year? And are you guys, we've heard from some other guests on the live stream that once you get past 3-4 years, things get a little bit tougher to figure out. It's 50%, 100% growth year over year the first couple years, but once you get to year 4 or 5, it gets a little bit more challenging. So how's this year looking?
Well, this is year 4, full year 4 for us. We'll be heading into year 5 next year as we hit our 5-year anniversary. We're on a 34,000 barrel pace this year. All 99% self-distributed. We're up nearly 70% over last year.
Wow.
Our IRI data is leading the Northern California region at 200+% growth in IRI. So, our growth trend is very strong and, and really picking up steam. We've got a great brand, we've got a great team, and, we're excited. I know the industry dynamics have shifted, but we're fully in growth mode and we're investing in the growth of the brand. And, it's exciting for us. We know that there's some folks that are not as optimistic, but where we are, we're in a great place and growing. And we've got our sights set on 48,000 barrels next year, so another 50% plus year.
And that's all staying in the Bay Area?
Yeah, we're statewide. We distribute as far south as Orange County currently, as far north as up to the Tahoe area.
Okay.
So we're out this way in Sacramento.
And but you're doing it all yourself.
We're doing all of it ourselves right now, with the exception we have a partner in the Central Valley, Stockton to Visalia. We have a distributor partner out there that that was a stretch too far. So where we're going with it,
but Orange County wasn't.
Well, we have like a satellite team down there that's
Smart.
covering out of LA.
I've made that drive down I-5 a number of times, and
it's not a pretty one.
Yeah, no.
It is definitely not a pretty one. But we're looking at closing off a boundary, realizing that really where our business is concentrated, where our opportunity is to really grow as a regional player is in the Bay Area.
Yep.
There's 4.2 million people just in the 10-county Bay Area. If you go Santa Cruz to Sonoma, and I don't think we've come close to really the market depth that we'd like to have. So we see that as the frontier still, even though it's our backyard. We've been doing business for 4+ years. So we're gonna invest most of the next year plus in growing that market. And then strategically aligning with distributors that really fall outside of that core footprint.
What gives you guys the confidence to remain so bullish as you are, and still project the kinds of numbers growing? You're going to grow 70% this year, you said, but
Yep.
To go from 34,000 to 45, 48,000 barrels next year, how do you guys have that much confidence knowing what we know about the space? 7,000 breweries at the end of this year, 950 breweries in California. It's super competitive.
Yeah.
Growth is slowing, but you guys are still pushing forward.
Well, there's still, once you get over that 15,000 barrel threshold and you get into that regional category, the competition is still not as crazy. It is under. Most of that growth of 7,000 plus breweries is in small and nano and micro and very small players that are serving amazing. They're serving their neighborhood, they're serving their community, they're serving their block. It's really exciting, the regionality and the locality of the industry.
Yep.
I think the one opportunity that has gotten a lot harder is becoming a national craft brand. That market,
it might be gone.
It may be gone. Yeah, you're right. That's a true national brand. We have some great ones, but whether or not we see another one is TBD. So our focus is really on California and being a regional California brewery. When you look at what Deb Carey's done with New Glarus and, what Bryant, my buddy at Rheingeist, has done,
Yep.
Building 80, 90, 100,000 plus barrel breweries, and they're in one state primarily.
Yep.
And we look at California, which is, basically an economy the size of Germany, and realize, why would we really ever need to send beer out of state? We've got enough people, we've got enough market here to compete. And I think for us, there isn't, we're moving into a stage where the challenges are not competing with a lot of the very small breweries. We're not trying to compete with those breweries. Even stylistically, are on the shelves. For us, it's getting in line, I guess, with the big guys and going toe to toe with not only the international boys but with just the larger regionals, and realizing it's a difficult space to play in, but that's where I think there's opportunity for independent craft brands that are local and regional, and I think consumers still want that, and they still want an authentic story around that.
Now, when you go from 0 barrels to 34,000 barrels this year, as you guys have done, where is that coming from? Are you cutting up the craft pie into thinner slices, or in your opinion, is that still coming from some of the larger domestic players?
It's a great question. I think our strength is definitely in the market that we bring the local credibility as a San Francisco brewery. I think for us, our brand's a little unique in that we bring almost like a Euro-minded approach to the beer styles. Mike Schneebeck, our brewmaster, is really focused on balance and creating more subtle flavor and not necessarily hit you over the head flavor. So
perfect time to be doing that.
Yeah, leading with a Kolsch is our front running brand.
Yep.
Has given us an opportunity to compete in a space where craft isn't playing that much, and I think I would say that an international European Pilsner might be a better competitor for us than all the great local IPA brands. We're doing great with our IPAs, but I think the real market share opportunity for us is our brands like Westphalia and Export and KSA, and competing in styles that are underdeveloped, but they're very sessionable, and they're bringing more people into craft. And I think that's really what we want. I mean, we've got an internal slogan, which is, make good beer for everyone. And we really try to live by that. We don't feel like it should be for a small subset of people that are really enthusiastic. We do those beers for our limited tap rooms and draft accounts, but we want to bring more people into craft beer in the beer category.
Yep.
And that's one thing. Is now the beer category, as we all know, is not growing overall. So how do we bring more people in that pie into craft beer, away from domestics and away from imports? And that's I think what keeps us up at night, and I think that's where we're focusing our attention.
Well, and that was going to be my final question as we run up against the shot clock here. You have spent a lot of time in the beer business, and you've been with a lot of different companies.
Yes.
And you've seen a lot of different changes. Mm-hmm. And I think one of the companies that you were with was Speakeasy, correct?
Mm-hmm. Correct.
And so I'm sure you have some insight into what was happening there. But as you start to think about the stops that you've made along the way, and just all the evolution that's happening in the category, where do you see things going over the next few years? And what concerns do you have?
Well, I think what I've learned. I mean, starting out as a regional sales manager for Firestone Walker, and 4 years at Speakeasy, and kind of continuing on my career, I think what's really changed since that time is, I think the thing that I keep coming back to is access to market. And I saw it about 5-6 years ago. The writing was on the wall that some of the doors that were wide open in 2010 through 2013 were starting to get closed, meaning distributors are way less receptive to new brands and new breweries, far more skeptical. Retailers are closing. Your larger scale retailers are digging in with the suppliers they've got, and they're not as interested in courting new innovative brands. I think that's the biggest challenge we're going to have for a lot of small independent breweries, is if they have designs on being regional and not just own premise or community neighborhood scale, it's going to become a bigger challenge to get the access to market to grow regionally.
Yep.
And I think it's just going to require a lot of planning and a lot of insight, and really understanding the market, what the challenges are, what the dynamics are. And I think that's the shift, and I think that's going to be the biggest challenge that at least the breweries that they say want to be 20, 40, 80,000 barrels, that are going to have to game plan for. Because it's not as easy as it was. And I brought Speakeasy from just California to 25 states over the course of a year. Everyone was welcoming us with open arms, and that is not the tone anymore.
Not at all.
You either really have to have already a name that's just erupting out of your own market to where people are hearing about it in the rest of the country, there's got to be something uber compelling about what you're doing that says why is this brand going to work in Chicago? Why is this brand going to sell in Florida? And I think the same goes for California. Breweries that are coming to California, are if they have designs on being the next like big player in the market, it's a lot harder than it would have been 5 or 10 years ago for an out-of-state brand to compete. And I think that's just a national trend, and I don't think that's going to get easier. So that's why we've really staked out this claim in our own distribution model and really building a distribution company that we can scale, because we just feel like that is going to be the pinch point in the industry for the next few years, and we don't want to have to deal with that obstacle. Like, we can just take our brand to market
One
the
less
way we
barrier.
want.
Yeah, for sure. Well, I could sit here and do this with you for probably another half an hour. Fortunately, we got to bring some other guests on. But Brandon, thank you so much.
Thank
for
you so much,
joining.
Chris. It was a pleasure.
Let's get a beer off camera and chat some more. And if you're in the San Francisco, actually, if you're anywhere in California, grab a Fort Point, check it out, check out their Kolsch.
Absolutely.
And help them get to 45,000 barrels.
And stay tuned for our Valencia Street, our first true tap room opening up in the spring.
All right. I'll be there.
Cool.
Cheers.
Thank you, Chris.
Brandon.